3, 2, 1. Welcome to the show.
All right, here we are.
Back again.
End of May.
I'm beardless.
What happened to
I
that?
just shaved it off randomly now. The kids are like, what the heck happened?
I thought when you retired, you had to get that picture taken. That was the last time that was going to happen.
I know. I just get tired of the scruffiness.
Yep.
Then I go right back to it.
So the TSP has gone dark.
It's dark.
Yes.
It's gone down.
And the market appears to be breaking out to the upside.
Oh, my God.
As if we didn't know that was going to happen, right?
Of course.
How many how many people on Facebook are like, what should I do? I mean, I'm in the G fund, right?
Nothing you can do. You're at wherever you left it.
Right.
Wherever you left it is where you will be next Wednesday when it comes back online.
Yep. Yep.
Which is
let's hope for the best.
Supposedly they announced, was it Tuesday? So last Tuesday they announced that supposedly June 1st is the date.
Yep.
And we'll see.
Yep.
I'm sure we're going to talk more about it.
Yeah. No, the show is mostly going to be about that. Yeah, okay. All right, so here we go. So TSP is in the middle of this, long-awaited overhaul. Hopefully it's back up on June 1st or sometime during that first week of June. June 1st is the Wednesday next week. We'll see. In the meantime, we got some new intel from a Federal Register that came out on May 10th. And we're going to go through that. That's going to be the majority. There's a lot of good details in there. I'm going to go over a bunch of the highlights, but I would definitely go to the site and check it out for yourself. But we'll talk about that. Bonus chart's going to be Apple because, again, I can't remember if we did it last week or the week before, but Apple's a big one because it's the number one stock on the S&P 500. And
it drives the train a lot.
Yeah. I mean, if Apple's not moving higher, the S&P isn't moving higher. And then we'll do the 2.5 year now at this point, 2.5 year weekly charts so that we can still keep the COVID bottoms in there. Okay. So Federal Register came out on May 10th. There's the link to it. The next several slides are going to be all from that Federal Register. If you go to it, that's the homepage. That's what it looks like. So the summary, the point of this entry in the Federal Register is to say that the rules that had gone out for comment got adopted. Okay, so that's really the bottom line up front. Is we talked about it, I don't know, a month ago when we did a pretty good breakdown of what we knew at the time, and there were a bunch of rules that had been out for comment, like the fee structure was probably one of the biggest ones. All those fee structures are going to stay, but there's a lot more details in here. And at the end of the day, Kim Weaver is your point of contact. Good luck if you ever call that phone number. Okay, so for anybody that doesn't know, what is a mutual fund? And it's kind of important because we're only getting access to mutual funds in the mutual fund window. We're not getting crypto or ETFs or the ability to trade stocks or bonds or anything else. It's only mutual funds. And for the time being, it seems like there aren't going to be restrictions on the mutual funds. But as we were just reading on was it Fed Week? Yeah. Congress has written a couple letters to the TSP board this week. Yeah,
the TSP board did a presentation. I'm sure it was a small audience of people that get to witness it. And it gave kind of an insight, maybe an actual preview of the system. It's the way it reads, that they actually got to fiddle around with it. Yeah. And so there were some concerns.
Yeah, there's some things that in the article that are different from what came out in the register that we're going to be going through. Yeah. So, I mean, who knows?
Right.
We'll see how.
I would caution saying anything is definite right now. Oh, yeah. Like, you know what I mean? Like, who knows what we'll end up with, and who knows what things may be altered. Sure. Like after it comes out. So we'll keep following it.
Yep. Okay. So what is a mutual fund? The mutual fund itself is formed when a special type of corporation called a fund company, right? It basically is a pool of money from investors, and they can invest in stocks or bonds or whatever the fund is the company that holds everybody's collective money. There's tons of rules that regulate mutual funds. It's probably the longest collective investment tool that exists, right? Back in the day, you only used to be able to buy stocks individually. Your broker would do it for you. Then mutual funds came along in, I guess, the late 70s probably. And they lasted pretty much on their own until ETFs came along. But there's a ton of rules and fees and everything else. It's regulated by the stock exchange. I think everybody pretty much understands what, in general, a mutual fund is. Each share represents an investor's part ownership in the mutual fund, and the net aggregate returns of the mutual fund's investment holdings minus fees and expenses and overhead, of course.
Yeah, I mean, it is in many ways similar to, we invest in funds right now,
yep.
right? All the C fund is a collection of
right.
Stocks, right? Investment.
Yeah,
the word just blew out of my head, but
the C fund just passively tracks the S&P 500 index.
Right, which is a collection of stocks.
But it does act as a mutual fund in a way. The fees are very low and all that, but
the concept is very similar because that's why it's called a fund, right? And so regardless, the idea of a fund is that you're not buying an individual stock or an individual instrument is the word I was looking for, an individual investment instrument, right? You're buying a collection of, and so that's a good thing in the broader sense, because normally what you would do is put a collection or a portfolio of things together that kind of guards you against risk and things.
Right.
That's kind of the idea. The best version of that.
Sure. Right. Like if you wanted to go out and buy, well, so much to talk about here, but if you wanted to go out and create a little portfolio for yourself, and you bought Apple and Microsoft and Amazon, and you were a tech focused portfolio, you could do that. Now, within the last couple of years, you could do it because you can buy fractional shares.
Yeah.
Back in the day, you had to buy a share, right? You had to buy a minimum of one share because you're buying a thing. It's a share. There's no half shares.
Right.
It's a share, right?
Yeah.
Now it's not like that. Now you can buy fractionals. You can a lot of companies you can, if you want to buy $1 worth of Microsoft, you can do it.
Right. And you can do it with little or no fees, no commissions. Like all of that stuff started going away. Now with mutual funds, right? That's not the case. They're kind of built. They're all built on fees.
Yes, definitely.
Every mutual fund has a different fee structure. This is where I think people, one of two things. I think when we get into this window, they're either going to get so frustrated because they don't really know how to decipher 5,000 options. Right? People have a hard enough time with 5 options, 5,000 options, and even if you are willing to do the dirty work to figure all that out, is it worth the time? Is it worth it? Are you going to get such a rate of return that it's overwhelming? Right?
Yeah.
Who knows?
Yeah.
If it's possible, we'll do it.
Yeah, we're gonna figure it out one way or another. Because we're gonna test it.
Yeah, we're gonna play with it.
But so the thing about a mutual fund, the mutual fund holdings are picked by a professional money manager called an investment advisor, right? So you're paying for an investment advisor to buy and sell stocks within the mutual fund that goes along with the sort of the theme of the fund, right? If it was a tech mutual fund, you're not buying ExxonMobil, right? The fund manager isn't putting ExxonMobil into that mutual fund, right? So when we look at the 5,000 funds, what we're looking at is basically the theme of the fund. And you can go to Morningstar and see what all the holdings of the fund are. But you're basically buying the ability of that investment advisor to buy and sell stocks within the mutual fund that makes the overall fund go up in value. And if you are a investment advisor right now and you're running a mutual fund and it's tech heavy, you are getting killed. It doesn't matter, and it's not your fault because you are only allowed, because of the fund theme is tech. If you can only buy and sell tech companies in your fund, and all the tech companies are going down, you're going to do the best you can, but you can't buy energy, which is the only thing going up right now. So that's basically what a mutual fund is. Okay. And this is all I took this from the Federal Register. Like I didn't pull these. These are all from the same document on the Federal Register. So what's a mutual fund window? It's a type of brokerage window. It's not an account. It's a window. It's a way to get into, have access to mutual funds. So brokerage window is a retirement plan feature that allows participants to open a brokerage account to put some of their retirement savings and investments that are not curated by their retirement plans fiduciaries. So we talked about it the last time we did this thing on mutual fund window, where the TSP is using a company called A-Lite. They're the ones that are giving us access to this mutual fund window. Most big companies have some kind of like stock buyback option in their retirement plan, and they also have something just like the TSP, and they'll also have this self-directed brokerage option. And so now we're kind of catching up with everybody else and having this self-directed brokerage option. So let's see. However, investing through a retirement plan feature is never as self-directed as investing through a brokerage account outside of a retirement plan, right? If you're investing in a retirement plan, your company, in our case the government, did a contract with some company that gives you access to a window with restrictions, right? So it's not the same as you having a self-directed IRA, for example, where you could, I can buy a house, I can buy investment property in my self-directed IRA, right? I can buy crypto, I can do whatever I want. But if I'm working for IBM or the federal government, let's just say the government, and they give you a self-directed window option like this, they can put all the rules on it that they want. And the last time we did this, we were referring back to an article that had an interview with somebody from the TSP board that said that they weren't going to put restrictions, they weren't going to put additional restrictions from what A-Lite already had. That obviously isn't happening, right? We only have access to mutual funds. And that is our restriction. It's not A-Lite's restriction. Okay. So at the end of the day, what is a mutual fund window? It's the government giving us an ability to put some of our money into mutual funds. Pretty much that simple. Okay. In addition, certain categories of higher risk trades that can be made in brokerage accounts outside of a retirement plan are often excluded from brokerage windows, like we just talked about. These categories include trading on margin, right? Buying puts and calls, futures contracts, crypto, all the things that you could do in a self-directed IRA, they're not letting us do in the mutual fund window. So subject only to categorical exclusions such as these, the specific investments available through a retirement plan's brokerage window are typically determined by a cluster of agreements negotiated among the plan's service provider, a brokerage firm, and fund companies. For the TSP brokerage window, I think it's kind of comical, but Congress, because they're saying that we can't do it by law, is what they're saying, right? Congress has excluded all categories of investments except mutual funds. Okay, so I highlighted that footnote, and I have at the end here, I have a bunch of links, and one of them goes back to that footnote, and there's another one in here I refer back to that footnote, and links to a couple of different laws that they built this around. So they're saying that Congress has excluded all categories of investments except mutual funds. Why they couldn't have told us that in the very beginning, I have no idea, but that's what it is. That's why it's called a mutual fund window. Sure. It's a type of brokerage window that is limited to mutual funds. Okay. So this was the proposed rule that came out, and they were looking for comments. We don't need to go back over it, but the majority, it's talking about that $55 annual fee, the $95 annual maintenance fee, the per transaction, right? You buy it, you're paying $28.75. You sell it, you're paying $28.75. So that it's not like you can reallocate. You know how in TSP you reallocate from the C fund to the G fund or whatever? You don't reallocate in the mutual fund window. If you own XYZ mutual fund, you sell it, that's $28.75. You sell it so that you can buy a different mutual fund. You sold it $28.75. You buy the next one $28.75.
Yeah, because this is, like you pointed out earlier, this is a brokerage account.
Right.
So this is treated like you hear us talk about all the time the differences between the thrift savings plan, a 401k, an IRA, and a regular brokerage account, right? And so that's an example of that, what we're always discussing, because this is going to be treated, because it is, like a brokerage account. So when you sell, the only difference here is selling that, because it's wrapped up in the TSP, you're not going to have the tax implications that you normally would, right? So that is where it's different, and people usually lose sight of that. So when you sell it, it's not going to be a taxable event, because you're in a non-taxable, account. So that's good, right? Good. But you have to keep track of the fees that are associated to see how that impacts your rate of return.
Yep.
Right.
Yeah, if you don't have a lot of money, I mean, the minimum, so none of the stuff has changed, right? The minimum is still, you can only put a maximum of 25% of the value of your account into the mutual fund window. And you have to put a minimum of $10,000 in.
Right. So that means anybody with less than 50K?
40K. Yeah, you can't even play it in the window if you wanted to.
Right.
So if you only put 10,000 in there, those $28.75 fees will add up pretty quick if you actively, trade back and forth. Mm-hmm. So it's just something to take into consideration. I mean, honestly, we don't know what we have access to yet. I can't wait to get into the mutual fund window, but energy would have been a good example this year. So when energy broke out, and if you would have to know this, you would have to do the research, but it was pretty clear that we're in a long-term bull market in energy. That's the kind of time when it makes sense to pay the fee, and you're gonna let it sit there. You're gonna ride some ups and downs. You're definitely not looking at it every day, because you can't. It's $28 every time you trade it. It's
$28.75.
$28.75.
Might as well be $29.
Okay, so like they said, we received feedback from 100 commenters. I find that astounding. 100 people, only 100 people.
6 million-ish active users have an account, and
100 people had comments.
That's why they do this in the Federal Register. Nobody knows about it.
You know what? I was thinking about that. We Google, spend half the day on Google, right? I Google TSP up and down in every which way, and I have never seen a Federal Register come up in a Google search.
Yeah, they probably have it blocked.
I mean, I'm just saying, you would think that if you right to the source, right? No.
Yeah.
No. All right. Anyway, so this was, number 3. I went through here and I just pulled out the highlights. So you definitely want to go back to the site and read it for yourself. Other investment options. So now I'm getting into, they talked about the rule and how the rule was going to stay. The rules that they put out for comment were going to stay in place. The majority of the Federal Register is their responses to people's comments. Okay, so in this case, they're addressing other investment options. Okay, several commenters suggested that instead of mutual funds, the board should offer individual stocks, bonds, ETFs. By law, mutual funds are the only type of investment the board is permitted to offer through the brokerage window. Okay. Mutual funds offer certain advantages over purchasing individual stocks and bonds. Certainly they do, such as built-in professional management, and they're the most common type of investment in the private sector, 401k plans. Okay. I guess that's a statement of them doing their fiduciary responsibility. But although ETFs offer similar advantages, they are not, technically speaking, mutual funds. And I have that link that I think it's the SEC. It links to the SEC that talks about the difference between a mutual fund and an ETF, if you care to look at that. It's true. They're not technically the same. The gist of it, the spirit of it is exactly the same. And our ability to operate, to use ETFs instead of or mutual funds in a mutual fund window would make a gigantic difference.
Yeah, I mean, my takeaway is that ETFs are, although they are managed collection, a portfolio. Yep. They're not as actively managed as a mutual fund, supposedly. And so that's why a mutual fund gets away with the more fees. And an ETF doesn't have those fees associated normally because you're just trading them like shares of normal stock.
Yeah.
That's where they, that's why ETFs are so, attractive. Is because I can trade them like shares and I don't have commissions and fees. And mutual funds, I have those fees and associated things. Right. And that's because, again, supposedly they're more actively managed.
Yeah.
Which makes them a safer, supposedly. I have all these disclaimers. Because it's not really true. At the end of the day, the similarities between the two are extreme, right? But it is what it is. It's not a mutual fund, and Congress said he can't. Like, that's what it comes down to. So change the law.
Yeah, good luck. I've been down this rabbit hole for 2 days, and I need to come out of it because I have really nothing good to say about any of this. Leave it to the government to screw up something that could have been really valuable. Okay.
They're keeping us safe, man.
Yeah. Yeah. They do a good job of that, as we know. Number of interfund transfers. Okay, so we received 22 comments objecting to an existing rule that allows only 2 IFTs per month. Amazingly, only 22 people commented.
I think 2 of those might have been us.
I think so. In fact, I'm positive it was. 22 comments objecting to the existing rule that allows you to do 2 IFTs a month. We propose that the transfer from a participant's TSP account to their mutual fund window account or vice versa will count toward the existing monthly limit of the interfund transfers. Trading within the mutual fund window will still be restricted by only by fees and rules that may be imposed by the mutual fund in which the participants choose to invest. So there's a couple of things to pull out of there, right? We propose that the transfer of participants' accounts to the mutual fund window and vice versa will count toward the existing monthly limit on interfund transfers. So let's say I have $40,000 in my TSP account. I want to move $10,000 into the mutual fund window. When I do that, the first time I do that, I pay all the fees, I do all the things, and it counts as one of my IFTs for the month. Once I get the money in there, then it doesn't do that, right? It just then I think you are literally on a different website. The rules are different. If you want to move money from the window back into the TSP, that will also count as one of your IFTs for that month. Yeah. None of the commentators addressed the application of the board's existing rule to transfer to and from the mutual fund window. Instead, the commenters objected more generally to the existing rule as it applies to the TSP.
So they weren't specific enough.
Yeah, they were probably griping.
And what difference would have been?
Right? No, it wouldn't make a difference. No. Yeah. We sought public comments, and so this is kind of their response, right? We sought public comments on existing rules a long time ago. We published it back in 2008. Everybody got their chance to tell us what they thought, and every comment about interfund transfers provided in response to our mutual fund window proposed rule was thoroughly addressed in the preamble of the 2008 rule. How the mutual fund window was addressed in the preamble of the 2008 rule, I have no idea. We're not revisiting the existing rule. We therefore believe these comments are outside the scope of the final rule that we are publishing today. I nothing good to say about any of this. The purpose of the existing rule is to prevent a small number of TSP participants who pursue market timing active investment strategies from diluting the earnings of other TSP participants and adversely affecting the ability of TSP investment managers. There is no such a thing to replicate the performance of selected indexes as required by law. I'm going to go out and say there's no such a thing as a TSP investment manager. And I'm going to find out because
I'm sure somebody holds that title. You know, what they're doing is beyond us. You know, what are they managing?
It's a passive.
It tracks the S&P 500.
Passively.
Right.
You're not managing anything.
Right.
But somehow our quote-unquote market timing activities.
Yeah, I wish they would have just said who pursue active investment strategies. That would have been fair enough.
Sure.
Don't put market timing as, because that's a way for them to make it look negative.
Yeah.
Because most people would agree market timing doesn't work.
Market timing is the dumbest term.
We agree, like the core, definition of what you say market timing is. We agree. You can't time the market, right? That would be trying to look forward and guess.
Sure.
That's not the same as using technical analysis to look at trends. Right. That's not the same. It's not market timing. But anyway, we digress. Let's just get through this.
The rationales for the existing rule are equally applicable to transfers to and from the mutual fund window. We are therefore adopting the proposal as final without change.
They basically just told us they don't care.
They told us to F off.
Buzz off.
Yeah.
It'll count as one of your IFTs and you'll like it.
And if you don't like it, we'll count it as 2 of your IFTs. Move on.
It is 2. One to go in, one to come out.
Many commenters objected to the noon rule, right? The noon rule cutoff for TSP transactions is set forth in 5 CFR 16 blah blah, and was not a subject of the proposed mutual fund window regulation. Therefore, the comments are beyond the scope of this regulation. Nevertheless, we will address the concerns. Yes, that's great of them that they weren't going to add the extra restriction within the mutual fund window to say that any TSP participants have to have their trade done by noon to get that day's closing price. Very nice of them to not add that restriction for us. Since the TSP went to a daily valuation in 2003, which was great, because before that it was like an allotment kind of structure, like in the military. You had to have your trade in by the 5th of the month to get the closing price on the 20th of the month. It was
absurd.
It was an allotment.
Mm-hmm.
There was no trading it. It was just, you just kept investing. There wasn't any way to play it for transactions requested at or after noon East Coast time, the transaction will be posted the next business day. The 12 p.m. Eastern cutoff is necessary to allow the TSP to begin the investment transaction cycle, which, given the size of TSP and number of transactions it processes each day, is a multi-part and complex process. All right, let's think about this for a second. Okay?
Let's think about it.
How many transactions does Fidelity do in a day? How about BlackRock?
Right.
How about every single financial institution in the world?
A lot.
And they do it up until the last tick at 4 o'clock in the afternoon on a Friday, right? Yeah. But somehow, TSP, who's not doing it? There's not government employees sitting there doing this stuff, right? But somehow they need from noon that day, 4 hours?
Yeah.
I feel like I'm getting a little wound up.
You are getting a little wound up. It's fun to watch.
Ugh.
I get to see this just about every day, folks.
Yeah, dude. Okay. I need new glasses too, where I left off. Multi-part complex. Because the transfer into and out of the mutual fund window will involve the sale or purchase of TSP funds. Oh, here we go. Because the transfer into or out of the mutual fund window will involve the sale or purchase of TSP funds, such transfers are also subject to the noon rule. So transactions within the mutual fund window are generally subject to a 4 p.m. Eastern time cutoff. Of course they are, because that's how the whole world works.
The market closes, yeah.
Some mutual funds may have earlier purchase cutoffs. Yes, there's all kinds of restrictions that individual mutual funds have. But if you transfer money from your TSP into the mutual fund window,
you have to do it before noon.
You have to do it by noon. By noon to get what exactly, I wonder? If you do it by noon, if I have $1,000 in the G fund and I'm going to move it into the mutual fund window, I guess I'm selling the G fund. I'm selling my $1,000 in the G fund, and I'm going to move it into the mutual fund window, and I'm going to get that day's closing price on the G fund. So whatever the price was in the G fund at the closing that day will actually end up in my
Yeah, it doesn't really tell us, like, can I move before noon, can I move into the mutual fund window and purchase some mutual funds?
Yeah, I think once they're separate.
Once you're in there,
once you're in, you're in.
Yeah.
That's fine.
I have to get in there before noon so that the GS2 clerical worker that's doing the trade can make that happen between noon and 4.
Yeah, 4 o'clock. Yeah.
But I can trade the mutual fund. I can trade mutual funds all day. Of course, you get closing prices, daily closing prices with them. Anyway,
that's something we kind of skimmed over pretty quick.
Yeah, I mean, I just feel like that the bottom line is they kept the 2 rule, and they kept the noon rule, because if they wavered on that, it's going to open up a lot of, well, wait a minute, you did it. You got rid of the noon rule for me to move into the window. Why can't you do so? I mean, we spent 30 years in the government.
Yeah.
We know that decision was probably made because that way it shuts off that argument.
Yeah,
and they didn't have to do it because it doesn't make any sense why I have to get in the mutual fund window by noon. But it is what it is. So that's where we're at. I mean, it keeps it pretty consistent. We'll still get to complain about, noon rule and mutual. Now, the good thing is once we're in the mutual fund window, we're in that other website, we're in there trading, we don't have those restrictions. We don't have the 2 moves a month. We don't have the noon rule.
No.
The noon rule would be absolutely ridiculous for this inside the mutual fund window because you're getting that closing day price anyway.
I was just gonna say that the biggest difference for our purposes, the biggest difference between an ETF and a mutual fund is that ETFs track second to second.
Yeah. Mutual
funds, that day's closing price. That's it.
So I mean, we're used to dealing with that, but that's not a good thing.
No, it's not a good thing.
Yeah, it is what it is, though.
Yes, it is. So, final rule, and I can hear some. I'm not going to say that. I can hear somebody making this speech, right? For reasons as we explained above, the board is adopting the proposed rule as final. We've listened to you, 100 people, and we've decided to keep the rule as it is without any substantive changes.
The wizard has spoken.
Yes, the wizard has
spoken.
Yeah.
Move along. Nothing to see.
Although the comments received did not cause us to make changes to the proposed rule, we did carefully consider all comments received.
Of course you did. Man, we're just getting negative.
This
is pulling us back into this negative space, man.
I feel like I'm back at work. Like that's comment process allowed us to address any of the misunderstandings about the mutual fund window, to learn if there are any unanticipated legal or policy. All right, I can't even do it. So I put this one in just kind of as a tickler. The subpart F. So when you go to the link, right, the Federal Register link, scroll to the bottom and go to the subpart F because it gives a pretty detailed explanation of all the things that are going to happen in the mutual fund window. It's not addressing comments. It's addressing what's apparently actually going to happen within the window. So you definitely want to check that out. These are the links to the things the laws that they referred to. It's kind of amazing. So this was the Federal Register that we kind of just went over, right? This was the one where they said only the justification where by law we can only... Okay, so that means nobody's seeing it.
Having a little technical difficulties getting the screen to change for Jerry.
You can't see it?
I just stop right there and keep going. Skip that other one and just go to bonus chart Apple.
Right.
For some reason, that slide isn't showing over here, and
that one slide.
Yeah, we don't have time to figure that out, so we're just going to roll on.
Wow, I almost feel like that's.
Yeah, we'll put those links up in there anyway. You can't click the links in that slide, so we'll just try to put those links in the comments.
All right.
Bonus chart
Apple. Okay, so the only purpose here for bonus chart Apple, we talked about it a week or two ago. Apple is the number one stock in the S&P 500, and as goes Apple, so goes the market. So this is a 10-year chart of Apple. Okay, this is a long-term trend line all the way back to 2013. Okay, so what happens eventually over the last 10 years, we get pretty far above that trend line, and we come back down to it, right? At some point, and it's possible that we can connect these up and we never get back to this trend line. It's a possibility. It's unlikely, but it's a possibility. So if we assume that we're going to come back down and test this trend line, we have a long way to go down. And the first thing we had to do to get down to test this trend line was to break this shorter term trend line. And by shorter term, it's 2 years long, right? From the middle of 2020 to now. And we broke it pretty substantially over the last couple of weeks. So until Apple can get back up above 160, the assumption is that it keeps going down. So that's the number one stock in the S&P 500. So, we're approaching being overvalued. I guess that's a good thing most of the time. Certainly if it gets down to 30, it's usually a bottom. But we'll keep an eye on it. So watch Apple, because as goes Apple, so goes the market. Okay. TSP fund charts. We've been beating the same drum here for months. The blue line is the 20-day exponential moving average line. This is a 2.5 year weekly chart. Each of these vertical lines is 1 week of price movement. Once we got back above the blue line after COVID, every time we came down and hit it, we bounced higher from it, right? Until January. And we've basically, now the blue line acts as resistance. We got above it a little bit here, came right back down for the longest downtrend since, I think, 2001. 7 consecutive weeks of down moves. And it looks like this week the market's going to close with a higher for the week. So that's awesome. We get a white candle, which we haven't seen here in a couple of months. 1 week certainly does not make a trend. And we are still really far below the moving average line. So, but we did hit the 30 level and then ticked up. So that's positive. I mean, nobody makes money when the market's going down, and we're not trying to catch the bottom. So if we do have a V bottom here, that's fine. At some point, we'll connect the trend lines and we'll get back in. Of course, TSP has to be open for us to do that, but that's fine. All right, so that's what it'll look like. S-Fund, same kind of thing. You can see once we got below that line, every time we came up and hit it, it's resistance. I have this long decline for the last couple of months. Obviously, we have some support there at 1,600, and then it looks like we're going to have a positive week this week for the first time in a while for the S-Fund. I-Fund, this is going to be the second up week for the I-Fund, which is good. We got a whole lot less room here to get back above its 20-week exponential moving average line, and we got higher relative strength at this point. So what we're really looking for is relative strength to get above 50, which, if you go all the way back here, after COVID, here's the COVID low. Once we got above that 50 line, we dipped below it a couple times, right? But it wasn't really until right here that you can see we got below that 50 line and stayed there. This whole time in here, if you're above that 50 RSI on a weekly basis, the market's going higher. Stay in it. Don't worry about the little ups and downs. As long as you're above 50 RSI, you're good. If you're below 50 RSI down here, bad things are happening. F-Fund. We've been talking for a couple of weeks about how the F-Fund might have hit a bottom, and at least on the short term, it seems to have. This was a pretty big week for the F-Fund. One of the things I got to do, and maybe it'll be next week, is a lot of people think that bonds and stocks work opposite to each other. That's not true. They don't correlate, and that's what you want. So if you're putting a portfolio together, you want a portfolio of things that don't, it's not that when one goes up, the other goes down. It's that when one goes up, it has nothing to do with what the other does, right? Mm-hmm. They don't correlate to each other. It's easy mentally to say, well, when stocks are going up, bonds are going down. That's not the case. This is very unusual. Bonds and stocks both going down together is very unusual. In the past couple of weeks, well, I mean, take away this week because stocks look like they're going to finish higher for the week and bonds will. But the last couple of weeks, bonds had been doing better than stocks. Bonds were moving up as stocks continued down because they don't correlate.
Mm-hmm.
And that's kind of what we want to see. All right. I can't take it anymore.
Of course you can.
Golly.
If you have questions, put them in the comment section where you found this video: Facebook, YouTube, Twitter Sphere.
Yep.
Anywhere. I don't think we post these on Twitter. But if you find it there, put a comment.
Yeah, put a comment.
Make sure you're watching our Facebook Lives in our public group. We do those every Wednesday, 2 p.m. Eastern.
2 o'clock, yep.
Jerry just did a great one on locking in your losses and buying shares cheap.
Shares cheap.
If you believe in those misconceptions, please go watch that video.
And if you think it's ridiculous, please put some comments. I was hoping I was going to be able to get some real,
I mean, we thought we were going to have a lot of naysayers, that like, and it's okay. There's, I know we're kind of being funny about it, but a lot of people believe certain things about those topics. Now, some of it is true.
Yes, absolutely.
But a lot of it is not. And anyway, go watch the video. It's all over Facebook right now. You definitely find it on our page and in our group. And give us some feedback on that. We're going to do a separate video where we kind of, that was only like a 10-minute video.
Yep.
So it won't take up a lot of your time. I think it's even got closed captions so you can just watch it silently at work. But we're going to do a longer video, sort of like this kind of format where we talk about those topics because it's really important that you guys understand how that works. Yep. Anyway, hope you guys enjoyed the show. If you did, share it with your friends. If you didn't, share it with friends. See you guys. Have a great week. And music.